anyone who is on YouTube, welcome to this channel. If you click on subscribe and follow, then you will get updates every time I post a video or analysis. Thanks very much, everyone, for jumping in on board. Okay, so last week we talked here, lots of tears and gnashing of teeth. Well, it's only natural when the market drops. It's only natural when the market drops that people get irritated, annoyed, all that sort of stuff. Okay. Now, if we have a look at this here, we had a double top. Now, it didn't 100% move up and touch that area. So it didn't 100% come up and touch that area. So we can see it there. But with the likes of a double top, it's never perfect. And as long as it doesn't chop off the body of the candle, there was a double top that we had. We had divergence to say that it should go down. And look what happened. It has dropped. It came down to this area. And I know some of you guys had an order long on that position there. Now, the good thing about this one here is it didn't trigger in. It didn't jump in. So there's where we would have been triggered in, and there's where our stop loss. We never got triggered in on this particular trade, which is very good. And now we have another setup. So we've now come back down into this area. And what we have to do and work out is this an area where we're looking to buy the market, or is this an area where we just sit and hold and let the market play out and do what it's supposed to do? So this is where this trend line has come from. So we've had 1, 2, 3, 4, 5, 6 bounces. Okay, so this is the trend line that we've had since this big drop down here. Look, so see this big drop here. So that's the level we've had since that big drop. Okay. So that was that drop in 2020. So now since then, for the last 2 years, we've had this upward trend, and it's consistently come back to this trend line, bounce, 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 bounce. So at this sort of level, are we expecting it to bounce to the upside again, or are we expecting it to drop lower? What's the consensus across the board here? What is your thoughts on this? Okay, so we're literally 50-50 across the board here. Some people are saying up, some people are saying down, which is pretty cool. That's the way it should be. If it's everyone is on the one thing, the market is trending pretty nicely. So what I want to do is I want to talk about the structure. I want to talk about the structure. So we've had 1 bounce, 2 bounces, and there is a 3rd bounce in this trend line. Now, looking at this structure here, what's the structure here telling us? This one here. So this whole structure. What's the structure of this telling us? Telling us that we have a clear movement to the upside, then we have a clear movement to the downside. The highs here are getting higher. All right, everything looks pretty cool. We've come back down into this floor, so there's a high probability that will jump. Okay, so there's a high probability that will continue to going, goes up, and then it comes back down. Now, what's the structure here telling us? What's the structure here telling us? So what's telling us here, we actually have a marginally higher high. It's telling us it has failed to break this level. Yes, we have a clear phase 1 and a clear phase 2, but this one has a less of a chance of it going up than this one. Why? Because this one broke these highs. Look, there was that high, and it's broken it. We have this movement. That's how much of a higher high we've made. Whereas this one doesn't. So looking at the structure of what's going on here. So this one doesn't. Then let's see what happens. It now breaks it. Now it breaks that structure and it absolutely obliterates it. So we're back down here now again. So the structure here now breaks. Retests. Perfect. So we have a clear phase one, phase two. So now we have 1, 2, 3, 4, 5. The only one we weren't happy with and we didn't take in this particular scenario was this one. That's the only one we wouldn't have taken, that one. So bounce 1, 2, 3, 4, and 5. We would have taken a trade here in this one and would have taken a trade here in this one. Wouldn't have taken this one. Why? Because it failed to break that high. Could have been a drop, but it didn't. It failed to break that high and then went on. So then look, the market has now made a higher high again. Brilliant. And it has come back down to that level. So if we look at this again, the structure, we will clear phase one and we will clear phase two. So it's cycling as we're going along, still meets the criteria for that. We've had a bounce here, which we wouldn't have taken. But we've had 1, 2, there's our first trade, there's our second trade, and now we have a position here. So we have this last position. If we look at the structure here, we've had a lower high, then we've had a higher high, and then we've had a lower high overall here. So the structure here is starting to move sideways. So we're starting to move sideways. So if we look at the structure, phase one, phase two, really, really good. Phase one, phase two, really, really good. Phase one, phase two, failed to make a higher high. Failed to make a higher high, so that means that wouldn't have been taken. Phase one, phase two, good trade. And now what we have is we have phase one, phase two, phase one, phase two, phase one, phase two. Okay, so we've got an awful lot of messing going on there. We also have a lower low. So we've had a lower high and we've had a lower low. Now, as a general rule, we would look at this, if we had a lower high and a lower low, we would potentially be looking at this as a short. We'd potentially be looking to short the market at this particular point. With what historically happens in sort of mid-January, we generally get a pullback anything between 10% to 30% mid-January. Now, this has happened or started a little bit earlier. We've had this pullback. We've had all the gains that we had for Christmas has literally gone back. We're back at zero again. So the question is this a trade that we can take? Does it meet the criteria? And if you're listing the 5 rules, of trading, so 1, trend. Absolutely, this has a trend. Your overall momentum is going up. Rule 2, cycles. I'm going to put in CYC, cycles multiplied by 2. Have we got 2 clear cycles? Well, you have a phase 1, phase 2, phase 1, phase 2. But looking at the bigger picture, yes, we have 2 clear cycles. Rule number 3, highs and lows. So if we look at this and we start here, I'm going to start here because there's no need to be back there. So we're going to start here. This is a low. This is a high. This is a low, but it's higher than that one, so it's a higher low. This is a high, but this is a lower high. This is a low, the lower, it's a lower low. This is a higher high. And then this is a lower low. So do we have that? So we have a trend, we have two clear cycles. We don't have this one. 4 is support and resistance. So it's bouncing off this floor once, twice, 3 times, 4 times, 5 times, 6 times, touching this floor. So we have support and resistance. In this example, we have a trend line. And then number 5 is PA, is price action. Now, if anyone looked at that bar there, this is the bar that we have. We have a low test bar. So the sellers push the price down. It hit the floor, and then the buyers push back in here. Okay. So in this particular scenario, the last half of the day, it tells us there's more buyers in the market at the last half of the day. So we would expect this to potentially go up at that particular time. So we have price action. So with the 4 out of the 5 rules, I want everyone here that's online. So there's a good few of you guys. Is this a trade you would take? We have 4 out of the 5 rules. Yes or no? Simple yes or no. Okay, so a majority of the answers are coming in here. Oh, wow, so we've had probably about 93%. So we're looking to buy this. We're not looking to short this, Stuart. We're looking to buy this one. So we've had about 90, I'd say 92% of people said yes. Now, when I'm trading, I need all 5 of these. I need all 5 of these ticked. Every one of them. I cannot have any of those not ticked. So because this one here is a no, that means this is not a trade for me. This is definitely not something for me. Now, if you must trade this, if you were someone who goes, oh, but Henry, I have an itch to scratch. This looks like a good trade. I want to take it. Okay, so there are people who will have an itch to scratch and they will want to take this. So if you're one of those people that has an itch to scratch and you have to take this, my advice to you would be is if you're looking to buy this, buy it as an ETF. Buy it as an ETF. Now, what an ETF is, it is an exchange traded fund, which is theoretically, sorry, I'm looking at the S&P on another screen. This is the Nasdaq. And so this is the Nasdaq. And the idea would be is if you're looking to buy this, you're trading the underlying asset, which means then you are buying physically the underlying asset. You can hold on to this, the same as holding on to a stock. But because of the structure here, look, we have this sideways momentum. Yes, it has hit this floor. We have a very soft horizontal there, very soft horizontal. But it's a trend line that's after holding that there. But remember, we have a lot of sentiment to the downside. So this is not a trade that I would look to take, but I've seen these trades take off and massively take off to the upside. But I am happy to let it go. I'm happy to let it run. And I'm happy not to be in the market here. Why? Because the structure of the market is not set up correctly. Okay, so that's how I see the market at the minute. So this is not a trade that I would be looking to take. And those rules have to be there for me to take the trade. I don't trade without those. So if we look at the S&P, so the S&P is here. So the S&P, unlike the Nasdaq, hasn't come back into sort of a level yet. It didn't hit that floor. So this for me is in a little bit of no man's land. So I'm not looking to trade this either. So we still have the original trade here opened. Went into a little bit of negativity, and now we're back positive. Now, if you did take this and you're unsure about the market, because again, this is pretty flat, it's pretty sideways. We do have clear cycles, phase one, phase two, phase one, phase two. The low, a higher low, and a higher low. There's a high, and there's a higher high. So we do have clear cyclicity to the upside. The S&P is much more bullish than the likes of the Nasdaq. Look at the two of them. It's much more bullish than the Nasdaq. But is this a trade that I would take? No. Why? Because the bar is huge. And also we've no floor, no support and resistance. Now you could say, Henry, there's a trend line there. You could do that. But you're being very subjective with that. You could even do that. And go, yeah, but Henry, look, the trend line works from down here. Not really. Let's see if this comes down the whole way down here. How many people have that there on the S&P? So now we have 1 touch, 2, 3, 4, 5. So out of the two trend lines here, which one is better, the Nasdaq or the S&P? Okay, so if we're looking at the trend line and just the trend line, the Nasdaq is a better trade. This line is much better. It's respected much more. So we have 1, 2, 3, 4, 5, 6 times. So it's bounced there 6 times. Whereas if we look at the S&P, we've had 1 touch there, 2, and then look 1, 2, 3 in a matter of a very short space of time. Okay, so we do have trading opportunities on these markets. It just is a matter of whether you are bullish on this or not. That's what it comes down to, whether you're bullish on this or not. Okay, and if you're bullish on it, then there is a trade. If you're not bullish, then don't trade it. And then we go on to the Dow. So the Dow, again, has a similar setup. And I can actually pull that up a fraction there. Well, no, that's better. It's much better. And the Dow actually did come down and more or less touch this horizontal here. More or less touch that horizontal. get rid of this there. Now the question is the Dow coming back down here, or do we expect the Dow hit this floor and then bounce up? But again, it's very flat, isn't it? It's very flat. Yes, we have a little cyclicity here with higher highs and higher lows. But is this the optimum time to be trading here? This? No, absolutely not. We have an awful lot of rumor about a drop. We have a lot of economic uncertainty at the minute. So we may see a bigger drop. We may see the normal drop. But again, we are coming into earnings season. We are coming into earnings season. So if we look at the likes of Apple, so the 27th of January, Apple is releasing its, is it 27th? 27th of Jan. Facebook, I want it's 22nd of Feb. 26th of Jan. Google, February again. 22nd of Jan. February. 27th of Jan. So we can see mid-January, or more to the end of January, we've earnings season coming up. But we could see a little jump in anticipation of what earnings are going to happen. So it depends on how you're going to play this out. Are we waiting till earnings season and then rebalancing your portfolio? Or do you think this is a drop that we're going to have and earnings season is just going to happen without earnings season? Now, some of the markets that were a little bit better is the likes of the European markets. And this is something that I put up in the chat group. The trade on this on the 4 hour. So if I pop down here to the 4 hour, there's a really nice trade. So look, hit its head here, come back, hit its head. We had a reversal bar right here. I'm going to move that out of the way so I can actually, so we had the reversal bar right here. Look, drop like a stone. We had divergence off this as well. So anyone that took that, well done. Stop loss above it, entry below it, and then drop down. Really nice trade. Did anyone take that from the group? I'm assuming not many people did. And I'm assuming many people did. Okay, so what's happening today? So we still have our overall trade here that we looked at from the overall flow here. So 1, 2, 3, 4 touches. So we're looking at this moving sideways. Now we have that up here as a 3-to-1. But under no circumstances would I've had my take profit on this particular trade outside this trend line. And when I got this double top, I more than likely would have taken profit. Okay. Or what I went through a couple of weeks ago was gearing, whereas we have the overall momentum going up, and then we're taking a short as the momentum is going up. So we have a level, we had divergence, we had a nice gear on this. But again, so again, we're now at a position where we have the clear cyclicity, and we've had a pullback into this area here. Now, the European markets haven't been as choppy as the US market. So if we pop this in here, we've had 1, 2, 3 touches, 4, and then we've had a little retest. So is there a trade long on this at the moment? On this, it's come back, retest it here, and we're looking for that to the upside. Now, the answer to that is yes, there is. But is that the best trade in the world? No, it's not. Absolutely. Not at all. We have the UK 100. We wanted to make a higher high and then come back down to this level, which it hasn't. We also had, well, actually did, it come back here, sorry. I'll put that back where it was. Remove that. Okay, so we had this little pullback right here. And there was an entry and a stop loss there. And then took that trade as about a 1-to-1 up at the moment. And let's see if that kicks on to the upside. But the UK 100 looks like the bullish, one of the more bullish of the indices at the minute, which is strange because it's probably been the worst performing one over the last 2 years. So we're having this upward momentum on it, which is nice to see. And then we had a really nice trade on the French CAC. So look, bounce, and then we had this retest right here. Really nice retest. And look what happened. The entry was above the bar, stop loss was here, and then the market dropped, and we were never triggered into this trade. So this was a free trade for us. We never got triggered in at that point. Completely dropped, which means then we're now, that trade is not triggered. Now again, with today, we have an inside bar. So we have an inside bar today. We have a nice inside bar today. Now there is a trade there again on today's inside bar. So just say today's bar finishes like that, the small inside bar here. Just say it finishes like this. There is a potential trade, but the entry, the stop loss is pretty big. So a stop loss has to go behind this low. We have to put it behind that low. And if we put it behind that low, we only get triggered in once the market takes off. So is there a trade on this again? Yes, there is. Is it the best trade in the world? No. Might this come back down to this trend line? Absolutely. Absolutely. But if we're looking at sort of trend-wise, it's the actual best of the indices at the moment. It's the most bullish of all the indices. It's a bit annoying at the trade. What was it? This one I think we took. We got triggered in, triggered out, and then look, it took off, which was massively annoying. But unfortunately, we can't always predict the market. But if it comes back down to there is another trade. Is that one valid? Absolutely. Is it the best one in the world? No. Why? Because we have that huge uncertainty at the moment. China, again, we're back at this little level. We did talk about this trade here. Wouldn't have been triggered in yet. Market is still pretty flat. And for me, there's no trade on this till it gets back to this purple line. Yes, I can understand there's a level there, but this is definitely not a trade I'm looking to take till it hits this purple line. US oil. So we talked about this potentially on the 4-hour. And if we'd taken this in a 4-hour, we would have got triggered in, triggered out. Okay, and the market is pretty flat since. So we got triggered in on that test, bounce, 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 and we're still at this same level. So anyone who took that trade there would have been triggered out. And look, we're still in that sort of same zone. And let's see if the market takes off or whether it doesn't. Is there anything on the daily chart? Nope, nothing on the daily chart. With this, we need a phase 2. We need to come back into this area and then potentially look at it. And natural gas is a complete stay away. But there's 2 stocks that are flying at the minute. And I wanted to bring your attention to it because it's not all doom and gloom. It's not all doom and gloom. We have some really, really good stocks that are running at the moment. Can anyone give me an example of 2 stocks that are flying? Moderna, I don't think so. Nope, Moderna is not flying. Banks also, I don't think so. Pretty flat. Today, Scottish Investment Trust. Right, well, I'll make it easy for you guys. Has anyone ever heard of Ford? Yes. Okay, Ford is flying. Ford is flying at the minute. Anyone tell me why Ford is flying at the moment? Yes, it all comes down to their electric investment. Yes, absolutely. And we look at this, we have two sort of levels of this now. And for us to trade this, we need them to come back there. And they're the only ones with microchips. I don't know the ins and outs of it, Mark. Could not tell you. But we can see here that we have massive upward trend. It stalled for a couple of weeks and then it took off again. We're spiking. We have really nice trend on this at the moment. We look historically. I don't think we're at record highs. I'm pretty sure we're not. Weekly. Okay, yeah, we're nowhere near record highs. Record highs was up here. We still have what, 30% for it to hit the record highs. There or thereabouts, give a few quid. Yeah, Cassie's pissed off with the market. And the other one that we're looking at is Toyota. Again, we've had a jump on Toyota. Can anyone tell me why Toyota has had a jump to the upside as well? Exactly, it's to do with their electrical cars as well. To do with their electrical cars as well. They've invested heavily into it. Okay. Yeah, I'll have a look at Scottish investment structure. Okay. But again, if we're looking at this, these are things that we can sort of jump in on. Remember, every time the market drops, there's still stocks, there is still parts of the market that do well. And rather than having this a depressing webinar, I wanted to bring up two areas, the likes of EVs, that the market's doing well. It's trending quite nicely. Yes, we have now had a breakout. Obviously, this was a great trade to buy us in here, but look, we've had a nice little breakout, and let's see if this breakout now is going to continue. Can we jump in now, Felix? No, we need a pullback. Look, we need a pullback there, and the same with Ford. We need a pullback back into these areas. Now, again, it's completely up to yourself how you trade it. But for me, I wouldn't be trading it here. I'd want to pull back and then jump in on it. But whether it'll come back to here, I don't know. I don't know the ins and outs of it. I don't know what's going to happen in the future, but the idea would be is that we would expect this trend to even continue. And if we get a nice little pullback, it'd be an opportunity for new investors to jump in. I'm assuming, no. Is it this one, the top one? SMT? Is that it? Yes. Stay away from it. We've had this massive drop here. Stay away from it. This is not something that I would trade. I don't see any reason for this to stop before it hits either of these two. I can't see it. I can't see it stopping before either those two levels. I could be wrong, but also I want to find out why this dropped. Is it because of the earnings? So for me, back down to these areas here. Was it because of the dividends? And then the dividend has changed there, 1.45, 1.97, 1.52. Okay, so have a look into that. Why this dropped? What's the underlying problem there? So both of those, Toyota and Ford, are on eToro. And if we look at BTC, so BTC came nicely down to our sort of buy zone here. So if we look at this at the moment, have a look here. This is the zones where we bought. As it's coming down, bought at previous little levels. So back. And again, here are my orders as well on these. So we'll go to portfolio, have a look at orders. Here are the orders that I have as well. I have an order on Cardano. I have an order on BTC at 31,000. And I have an order at BTC at 21,000. I also have an order on Moderna at 197. It drops. So they are my orders on the likes of those levels. So it's come back down into these areas. Now, the question, I suppose, is do we expect BTC at some stage to hit 68,000 again? Do we expect that to happen? Yes or no? Do we expect it to hit that level at some point? Yes, 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 absolutely. Yes, 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 yes. So the only question then, I suppose, is when do we buy it? How much of our portfolio do we put into it? So So you think it's going to go to 100K? Okay, Stuart, what's the thinking behind going to 100K? Gossip. Absolutely. That's it. It's gossip. It's rumors. It's gossip. It's absolute crap. But we know it's hit 68K before. So we know that that number is, again, tangible, isn't it? And that's the beauty of it. We know that that's where it should get to again, at least once more. Obviously, we want to do it. Look, I'd love to get it to 200,000 or a million. Okay, so I'm not anti-crypto. But if we look at this here, down to where price is today, it's a 40% drop. Okay, that's a 40% drop it's had. Whereas if we go the other way around and we hit it up here, that's a 66% return on investment. So there's 60% upside to hit there. Now, if it's 100K, then obviously you've done what? 150%. If you buy it now and it goes to 100K, you've done 150%, which is brilliant. But we only can talk about what it has done recently or historically. So the 68K is it's hit before. Now the question is will it go down to 30,000 before it takes off? That's the only question, isn't it? Will it hit the 30,000 before it takes off to the upside? So remember, trading is about probability. Trading is about probability. So looking at the market structure, okay, depends on Kazakhstan. Well, looking at the market structure, because that's what trading is about. It's about probability. And let's get you guys see what your thoughts on this is. Okay. So is the probability higher or lower of it hitting 30K? So which is more likely of it hitting 30K? Is it the probability higher or lower? Okay, so the only one that's come up with an actual reasoning was Stuart. Well done. And that's exactly what I'm looking for. I'm looking for a reasoning behind it. So what Stuart said to me was, because the trend, the momentum is going down, there's a higher probability of it going down or getting close to 30K than going up from this point. Why? Because the overall trend is going down. Bubbles has just said, well, it's a double bottom, so it should go up. Absolutely. Absolutely. It is a double bottom. But the question is, out of these two levels, which one looks a better level? This one here or this one here at 28,900? Whereas this may slowly edge its way down and hit this area. So there's a trend line since September going up here. Okay. I will pop that in. Now, looking at the chart here, is that trend line to be trusted? Yes or no? Rather than me, let's see the consensus. Is that trend line to be trusted? Yes or no? And the answer is no. Because the idea is to make things super simple. So the idea is to do things that are super, super simple. Now, I've been trading 10 years. Now, I wouldn't have put that trend line in there. I would have had my double bottom in there because that's a simple thing, yes. And my double bottom, there's a soft level along there, but I wouldn't have had my trend line in here. The idea is to make things that are really simple for people to see, that everyone can see this. And then when everyone can see these things, that's generally where the market takes off. Why? Because everyone is buying in at the same area. Or a whale jumps in and then takes off, which absolutely could happen. So for me, this trend line, yes, it's there. Yes, it works. But is it something that I would trade off of? No. Is it something that I would buy an underlying asset off of? Maybe. Well, theoretically, I have off this green dotted line is where my entry was. So I actually have an entry there, but it wasn't anything to do with this trend line. So the idea is to get you to understand that there's a higher probability of this hitting this level here than going up from this point. And once you understand that, if the market drops, it's not annoying you. You understand that, look, the process, that's the area we would expect it to bounce. That is the area there where we would expect the market to sort of get some sort of upward pressure. So with that in mind, you could take a position here, but the idea would be is if you're looking to jump in at the market as it's turning, the idea would be is to maybe half your money, put half your money there and the other half there, rather than putting all your money in here. That's the idea. We're expecting the momentum to come down. We're expecting the overall market to continue dropping. Now, it may not quite get here. It may come down halfway, and then people are like, okay, cool, now we're looking to buy before the market hits this level. But to me, that is still a buying zone, and that's a much stronger buying zone than this one. So the idea would be is to make sure you understand that there's more pressure to the downside than up. And again, only time will tell whether we're correct or wrong. Yeah, I'll have a look at that. I also want to have a look at ADA, because that is coming down to another really nice level. So again, so we talked about this. We talked about this scenario, hit its head. Go back and watch some of the recordings on the CAMAC, hit its head, and we talked about where this market was going to go. Did anyone short the market at this particular point? Because that's exactly what happened. It went up, hit its head, and dropped down from that level. Look, bounce, 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 underneath, and then underneath. I understand you can't short an eToro, but there are other platforms and people do short this market, hence why it's going down. So again, I have an order here on this green line. So we'll see if that hits. We talked about putting a potential order just a little bit above it, just a little bit above it. So let's see if my order gets triggered in this green line. Because I missed it there, it didn't trigger me in there, and it didn't trigger me in there. So let's see if it triggers me in. Now, again, what's the probability of it hitting this floor? Is it higher or lower than hitting this one? And obviously the answer is much higher. The only question I have for this one at the moment is it going to stop at this level? That's my only question. That is my only question, because we had a drop here. So if I get this. So we had a drop here. And then it took up with a second drop, went up with a third drop, and then it took off. So what's the difference with this structure here than this one? What's the main difference? What's the main difference in these two structures? Time. Okay, most people are missing the point. The decline is more gradual. Okay, so what's happening here is we have a boom and then we have a dump. We have another boom, we have a dump, we have a boom, and then we have, as you can see, this is a boom and it's a dump, another boom and then a dump. And this one then is a little more gradual. People have now stopped buying it and dumping it. Okay, so this is now gradual, and now it's hit off here, and then we get this proper upward trend. And now we can see that this is now cycling to the downside. So this structure here was literally a boom and a jump. This is the same as these meme stocks, a pump and a dump. Whereas this is not a pump and a dump anymore. This is a pump here, and then this is now gradually coming back down. It's slowly but surely coming back down, which is telling us there's more sellers in the market than buyers at the minute. This was just literally, people bought it, they jumped on board and then shorted again. Hit the floor, they bought it, shorted it again, bought it, shorted. Whereas this here now is slow, concise. People are jumping out of the market, they're taking their profit, and they're waiting for it to hit a level. So the only question is it going to stop here? Now, the market structure here would tell me no, would tell me it's going to drop lower. But we do have a pretty decent level. We've had 1, 2, 3, 4, 5. We've had 5 touches on that level already. Okay, so that's the idea here. Now, Stuart says ADA has been disappointing, so the sentiment has become poorer as the other alts are better. Okay, I don't know, but I can see that in the structure. I don't need to go into any details, fundamentals, and read that. I can see that there. The only question is where it's going to bounce there now. That's the only question we have. Whereas Matic has done the opposite, hasn't it? So we talked about trend lines earlier on. This here looks a much better trend line, doesn't it? Looks a much better trend line. So what was I asked to look at? Bear with me. Centrica. Centrica is the energy company, is it? If I'm not mistaken. British gas mother company. Yeah, okay, cool. Makes sense. It has had a pretty good run since August. It's had a really good run from August since August. But to trade that potentially has to come down to there. But the idea would be is a horizontal. The best one would be come back down to that one. So see that support and resistance there comes back to that level. That would be the ideal scenario on it. But with this sort of upward trend, it's probably not. Now, what I'll be doing is looking into why this is spiked. I know absolutely nothing about this sector here. I'll be looking into it to find out whether it's to do with green energy, whether it's to do with the cost of oil and energy and stuff, whether it's a sort of a project that the government are coming out to do and try to lower the energy bills for people and all that sort of stuff. So it's had a pretty good 6 months so far and looks like it's going to continue. So that's a pretty good note to sort of end the webinar. So we've had two trending stocks that are looking pretty nice. We have Ford and Toyota, and then we have the likes of this one here. Okay, everyone, it's been an absolute pleasure. Thank you very much. Hope you all have had a good webinar, and I'll see you on next Tuesday. If anyone wants to jump in on the bootcamp, the application for the bootcamp is finishing. It is finishing on Friday, and then the first bootcamp will start on Tuesday. If you want to know how to go to bootcamp, you just go on to my website, henry-war.co.uk, and then go to the bootcamp section. So to get to the bootcamp section, you have to have a free login. If you haven't got a free login, then just set it up. All right, so everyone, it's been an absolute pleasure. Thank you very much. Hope you have a lovely evening, and I will speak to you next Tuesday. Bye-bye.